Hey everyone, a couple of events last week are bringing me back to the inflation conversation. First, the June inflation numbers were released, and second, the chairman of the Federal Reserve, Jerome Powell, provided testimony to the House Financial Services Committee. These two events give us a good idea where we are, where the Fed thinks we're going, and what to expect as a result. The headline inflation reading came in at 5.4% for June, the highest inflation level since 2008. Chairman Powell in his testimony admitted that inflation is well above their 2% target, but the Fed still expects inflation to be transitory, driven up over the short term by logistics bottlenecks and a surge in consumption. The Fed still expects inflation to come back down over the next 6 months. That said, Chairman Powell left the door open for taking action if inflation proves not to be transitory. The Fed's walking a tightrope. They're trying to keep interest rates down and money flowing despite rising inflation pressure. It sounds to me like they're playing for time. They're trying to extend the runway into the fourth quarter to give the economy time to mend from the pandemic and to support job creation. But in the process, they're running the risk that inflation could get away from them. And if that happens, the Fed will be forced to tighten the reins faster and more aggressively than they'd like. Many of the factors driving inflation are likely transitory. Prices of commodities like lumber, steel, and copper are way up. But as the pandemic abates, commodity supplies should increase and pricing pressure should relax. But other pressures are emerging. Average hourly wages are up 3.6% over the last year, and if you compare current wages to pre-pandemic levels in February last year, they're up 6.6%. That's a problem. Wage growth tends to stay with us, and as wages rise, they put upward pressure on other prices. Likewise, housing costs have surged dramatically. The median home price is up 24.4% in the last year. Wages and housing inflation tend to stick with us. They tend not to be transitory. And that implies that at least a portion of the elevated inflation will still be out there in 6 months. Ultimately, whether it's 3 months from now or 6 months or longer, the Fed will have to take some action. Most likely, they'll start by tapering their $120 billion per month purchases of Treasury and mortgage securities. When they slow their purchases, it's likely that long-term interest rates will rise. Although the Fed hasn't taken a firm position on when they'll start to taper, saying things like, it's still a ways off, their hand could be forced in early 2022 or perhaps even the fourth quarter of this year. So here's the good news for real estate investors. Vacancies are declining for most property types. At the same time, rent growth for most property types is comparatively strong. Through the second quarter, apartment rents have risen 4.3% on a year-over-year basis. Industrial rents are up approximately 5.7%, self-storage rents are up 9.7%, and even retail rents are up by about 1%. In addition, interest rates are still exceptionally low and lending liquidity is high, so investors can lock in fantastic financing right now. But competition for assets is strong and prices are generally pushing up. Between that and the prospect of rising interest rates, the strong buying window will not be open long. On the other side of the coin, investors considering selling have a prime opportunity right now. There are a lot of buyers out there, and many are trying to go direct, making unsolicited offers in an effort to get properties at prices below market value. Those offers might sound good, but values are changing fast, and selling direct often leaves money on the table. Getting a broker opinion of value before you take an unsolicited offer is something every potential seller should do, just to be sure. Over the long term, commercial real estate is a great inflation hedge. And the long-term investors, the one who've been through multiple business cycles, know that. They look past what's happening today, keeping their eyes on the horizon.